Welcome back to the Williams Real Estate Channel. Today we are discussing the monthly market update for August 2025. To kick it off, out of totality, we saw an increase to the National Dwelling Home Value Index by 0.7% across the board. This was driven out of Brisbane with 1.2% up for the month, followed by Perth with 1.1%, followed by Darwin with 1% up for the month, then Sydney 0.8, then Canberra with 0.4, Melbourne 0.3, and Hobart was the only metro market that was in a decline for the month. So another solid month with the reduction in interest rates and the looming 5% deposit for all first home buyers is sparking interest into the market as people start to now get their mojo together and start buying up. We're feeling it on the ground. Definitely a lot of euphoria is coming into the markets now, coming into spring. And for the year, we have seen the most growth out of Darwin with 10.2% up for the previous 12 months, followed by Brisbane with 7.9%, Adelaide 6.5%, and Perth 6.6%. And then Hobart with 2.6 for the last 12 months, Sydney 2.1, and Melbourne 1.4%. So solid growth out of Darwin, Brisbane, Adelaide, and Perth, and lesser to the extent Melbourne, Sydney, Canberra, and Hobart. The combined regions up 6% also for the last 12 months. And if we dig a little bit deeper underneath the hood, we'll find the median price point for Sydney, top of the ladder, most expensive city. Second to that, Brisbane, with 949,000 median price point. In third place, Canberra, 872,000 median price point. Fourth with Adelaide, 851,000 median price point. Fifth place, we have Perth at 841,000. Sixth place, we then have Melbourne with 803. So extremely good value out of Melbourne. Historically, it's second behind Sydney and it's currently sixth place. We then have Hobart in seventh place, median price point of 680,000. Finally, Darwin in eighth place with 553,000 median price point. So pretty good value out of Melbourne, Darwin, and I also believe Sydney, where they're currently in the cycle. If we move on to the 18-year land cycle, this is where I derive to where each market sits. This is our framework we use to work out where each market is potentially heading based off historical trends and looking at the historical sales data. We are on that blue marker, 18 months away from peak market, 2 years away from the next downturn. Come 2028, it'll all start. End of 27, it'll probably start, but by 2028, it'll definitely be starting the next downturn. So we are now no longer focusing on the likes of Brisbane, Perth, Adelaide, Darwin, regional South Australia, WA, and Queensland, and we are more so focusing on Sydney, Melbourne, and certain regions for the future growth runs that are on the horizon. As you can see, we are sitting on a similar point of the cycle of 2006. So around this point of historical trends. And as you can see, Adelaide units is away at the races, but is starting to lose a bit of steam. And if we look back at history from 2006 and onwards, pretty much all hit a top and then went pretty stagnant and subdued for many years. That's Adelaide units. When we look at regional houses in South Australia, again, has been away at the races, had a solid growth run recent years. It seems to kicked off a little bit further from previous month we were saying it was potentially losing some steam, but looks like it's going for another leg. And if we look back at history from 2006 and onwards, had a little bit more growth up until 2007, 8, and then topped out and went pretty well subdued and flat for many years. So regional houses in South Australia could well have another 6 to 12 months worth of growth before then more or less hitting its limits for now. If we look at Perth units, it was showing signs of a top in the previous month's data, similar to what happened in 2005-6. And with the recent data out, looks like it's also having another growth kick up. So it could well be going for another 6 to 12 months and then could well hit a top similar to what happened in 2006-7 and then go through a similar subdued up and down growth projection. So could well have a few more stronger months ahead, 6 to maybe 12. I would say max 12 months, but probably within 6 to 8 months of further growth in Perth before hitting its limits and then showing signs of a top and then start of a downturn. Regional WA looks to have continued its strong bull run, just like what happened in 2005, 6, and 7, and then come 2007, 8, it then went through its downturn for many years from 2007, 8 to 2018, 19, 2020. So again, another market we're definitely not suggesting to go buy into, as sure there might be another 6 to 12 months worth of growth in regional WA for houses, but based off historical sales trends, it could well be coming close to a top in the near future and then going the other way. When we look at Brisbane units, continue to power on strong. This is a middle ring suburb in Brisbane, and we'll probably have another 2 years, I'd say, 1.5 to 2 years of growth based off what happened from 2006, 7, and 8 before you'll hit a top and then go through a more subdued growth path. I've been getting some comments saying, is the Olympic Games going to keep it going on for further and prolong the growth? I don't believe so. Probably more so give it a final sugar hit. So it will make the boom a lot larger and then potentially the downturn after 28, 29 could be probably a bit more severe than what we saw in the likes of 2008 and 9. I don't think the Olympic Games in 2032 is enough to ultimately keep the market through a growth cycle. Once a market goes up, trough to peak, more than 100%, 150%, the local wage cannot afford to keep pushing it on and on and on forever. So I know a lot of people think the party's never going to end, but this is a typical thought process of mainstream folks that look to get into markets when they're booming. Everyone always thinks that the party will never end until the party does end and everyone's got a hangover. So buyers beware of Brisbane. We stopped buying in Brisbane in early 2024 as we were finding better markets with higher growth projections, with stronger yields, with less risk than the likes of Brisbane. We do love Brisbane. We've got many properties up in Brisbane, but at this stage of the cycle, it is by far too far gone for our liking. Now, if we look at regional Queensland is await the races, and we'll continue to do so for probably another year or two after Brisbane. The ripple effect historically trends out off the back of its respective metro. So it could well continue just like it did from 2006, 7 all the way to 2008 and 9 top before then hitting a top in say around 2028, 29, and then it will go through a downturn similar to what happened from 2009 to 19. So a solid 10 years of negative growth path, 30 to 40%. So buyers beware of regional Queensland. I know a lot of people are getting caught up in the hype and going and buying stuff in Cairns, Townsville, surrounding towns. But yes, you'll get growth, but the risk is definitely growing and growing for the downside because as you can see from around 2006, 2007, where we sit in the current cycle, median price point of this town was just over 200. It continued to grow to just over 200, and growth projection kept going until just under 300K. Then it switched off in 2009 and went all the way down to below 200,000. So if you're buying now at a median price point of 450, it could well end up below that price point within the next 8 to 10 years. So from our perspective, regional Queensland has done its dash. We're no longer looking to buy property in regional Queensland. We have multiple properties and we're adding value by renovation and development towards the tail end. Good time to do it now. But in terms of continually acquiring property in these regions, we don't believe it's a good idea, as we believe the price points will be lower in the future years ahead than they are today, based off historical sales trends. When we look at Darwin units, Darwin historically is set to go through a solid bull run, like what happened from 2006-7 to 2013. It started to do its growth run or bull run from 2019 to 2021, 22, then hit a top, started to soften, and has now started to stagnate. So it could be it for Darwin at this stage of its growth path. China's definitely not as strong this time around than they were pre-GFC, so they might not demand as much raw materials, coal, gas, iron ore that goes into their construction property sector to building and manufacturing. They're also getting a lot of pressure out of the US, so this time round they might not set off our mining sector in the regions such as Darwin. So therefore, Darwin's land market or property market may not actually see the growth that it had during pre-GFC and during the GFC prior cycle. And this could be it. So for our liking, we're focusing on other markets than buying units in Darwin, as the price points are already quite high and it could really go either way. It could stagnate here, or it could go for another leg up. It's a bit of a roll of the dice. So we like to get into markets where there's definitely a lot more stability, where there's less risk. Also, geopolitically, it's not in the best location. If we were to head into another war, like a World War III, Darwin's in a high risk location. So we always think about these scenarios and aspects when investing in property, as you are using a lot of money and capital to invest, and you want to make sure that it is protected from the downside risks, as well as putting your money into the market that will have the most prospective upside in the future years ahead. When it comes to regional New South Wales, topped out in 22, 21, 22, went through a bit of a downturn, is showing signs of stability and stabilizing now, and will probably just stagnate like what happened from 2006 all the way to 2015 for another. Could see regional New South Wales stagnate out for a good 8 to 10 years before going through its next growth cycle. So again, no rush on regional New South Wales. I know there's a lot of people pushing people into the likes of Cessnock, Hunter Valley region. We love the Hunter. I've got multiple properties all throughout the Hunter, from Maitland, Muswellbrook, all the way up to Tamworth. But in terms of market acquisition timing now, not the right time to buy there. You'll buy a house in Cessnock for 500-600 grand, and in 10 years' time, will be selling for the same price point. There's definitely other better markets to put your money to work that will receive growth a lot quicker than the likes of Cessnock. Cessnock's a great town, but timing wise, there's plenty of time on regional New South Wales. There's definitely no rush. Same goes for regional houses in Tassie, topped out around 21, 22, went through its downturn, showing signs of stabilizing, and will probably go through a more subdued flat period similar to regional New South Wales, like what happened from 2006-7 all the way to 2015 before experiencing another growth run in the second quarter of the next cycle. Hobart units also topped out around 2021, 2022, went through its downturn, showing signs of stabilizing, and will probably go through a more subdued growth path similar to 2006 to 2015, before then having another solid growth run in the years ahead. Regional VIC houses also topped out around 22, went through its downturns, showing signs of stabilizing. Has recently picked up a little bit. There's a lot of hype around regional VIC, but I think the hype is more so being pushed from investors and certain buyers agents. There's time on regional VIC. It won't go through as long as stagnant flat period like regional New South Wales, as the towns are closer to Melbourne. But regional VIC will outperform off the back of Melbourne once Melbourne has gone through its bull run of at least 50 to 60%, and that hasn't happened yet. So there's time on regional VIC, definitely, and we won't be focusing too heavily on regional VIC for probably another 3 to 4 years until Melbourne has well and truly done its at least half its growth cycle. That's when we'll see the likes of regional VIC then start to pick up again, like what happened from around 2000 and let's say 10, 11, 12 to 2020. So good few years away, a couple of years away now. So no rush on regional VIC. When we're talking about Sydney units, great time to buy. We've been buying. We are liking Sydney units, as you can see, has been going through stagnant flat period for a number of years, ever since the boom ended around 2017, has been going pretty well stagnant and flat and subdued. Is due to go through another couple of years, I'd say 1.5 to 2 years of stagnant flat period before then starting a growth cycle again, like what happened from 2008 to 2017 in the first quarter of the current cycle. So we are now sowing our seeds in certain markets, in certain suburbs, in certain price points, certain types of property types in Sydney. Good time to start getting your ducks in a row before the mainstream herd all start charging in the next couple of years and get a good deal. Melbourne units, I believe, has already started. Melbourne troughed out, I believe, early this year, late 2024, and it's only up from here. As you can see, it has been pretty well resilient, this suburb, through recent years, but has more or less gone through a more stagnant, subdued growth path. And if we look back at history from 2005-6, it started and then took off, went through a solid growth run from 2007-8 all the way up to 2017. So people are saying, why buy now if we're due for the next land-driven downturn come another year and a half, 2 years? As you should know, there is not one property cycle. Each state, city, regional town, suburb, property type, and price point all perform differently at different stages of their own cycle as the overall macro 18-year land cycle framework plays out. So not every market is going to go through a severe downturn in the coming years. The markets like Adelaide, South Australia, Perth, WA, Brisbane, regional Queensland, Darwin will do so. They'll get the biggest brunt. But the likes of Sydney, Melbourne already had their downturn in recent years and have already gone through their downturns and stabilize and stagnate out and have reached their bottom. And it only has a good solid prospective years ahead. From here, yields are starting to rise now in Melbourne. Sydney yields are coming good again. the likes of regional Vic, Hobart, regional Tassie, New South Wales. There's plenty of time on those regions. Yields aren't there. They're about 4-ish, 3%, 4%. So the yields need to come good. Once the rents start to rise, that will then indicate future growth. So definitely no rush. I know some people are pushing people out there because it's cheap, but cheap today can mean cheap tomorrow. But just because it's cheap doesn't mean it's good value. There's other metrics you need to use under the build cost, strong yields, and overall timing based off the historical sales data and the 18-year land cycle. You don't just go out and buy stuff because it's cheap. You can buy a cheap house today. It could be the same price point, if not even less in 10 years' time, if you're not cautious and you're not being strategic and you're not across this type of research. As always, shoot me an email if you want help building your property portfolio, navigating the market cycle as we go through the next couple of years. It's going to be turbulent times ahead. It's going to be continuous, more, I guess, noise around the property markets, housing crisis, you know, typical behavior of tensions in the community as prices continue to keep rising. People who are invested in property will continue to prosper and do well, and people who don't invest in the markets will continue to get left further and further behind, especially when we go through the next land-driven downturn. The RBA will be dropping rates before you know it and printing a heap of money, and that ultimately gets soaked up in higher property prices, and then we are way at the races again onto the next market cycle. So shoot me an email if you want help navigating the times ahead. There's always a market prime for growth. So never wait to buy property and wait. Please also remember that this content is general in nature and is by no means personal or general advice. Prior to making any investment decision, you should seek independent advice in relation to your purchase of any property. With that said, we're buyers agents. We can help you buy investment grade stock and help you build a 10 plus property portfolio. If you want help, shoot us an email. We've only got about 15 spots available until Christmas. And if you want to jump on board, join our community, get in touch today. Until next time, thanks for watching.